Sylvia, I'm going to start with you in terms of just whether, I mean, I don't know if you were listening at the top of the show. We keep asking the question, has the train left the station, or is the train left the station but may return to the station later this fall in terms of where the market is?
Good morning, Ann. Yeah, good morning, Andrew. I think it's a great question. And I think that what we're seeing is a bit of a tug of war in the market. So on one hand, you have this excitement because earnings, more than 50% of names have reported now, and they actually look pretty good. So it looks like companies have been resilient. We've had those 275 BIP hikes, and it seems like the market has also been resilient and sort of factored that in. So you have this excitement there, and there's this thought that commodity prices are coming down, gasoline, lumber, and that also bodes well for the idea that perhaps inflation has peaked and the Fed can sort of slow down a little bit and take in the data, which was the message that was received from Chair Powell. The other side of the tug of war is that might not exactly have been the message, because he is still looking at June data where inflation is extremely high, wages are still rising, employment is still strong. So it's going to be hard for him to sort of achieve his price objectives there. So there's a little bit of risk. I think in the short term, we have range-bound volatility. The train goes back and forth. I think we could retest, lower levels than we're at now. I don't think we'll get back to the June levels, particularly in tech. So I do think that it's range-bound volatility, kind of sit on your hands, pick your spots here. But longer term, if you're an investor who accumulates for a longer term outlook, prices are still lower. The market has reset, and there are still good opportunities to add to your portfolio here.
Steve, you take issue with that? You agree with that?
No, I agree with that. I think, I focus in on the technology sector, and, I think what we're seeing is a tale of three cities, right? You see anything that's online ad supported going through a lot of volatility right now, because what's the first thing that gets cut when everyone thinks that a recession is coming? It's going to be your marketing spend. And so that affects a lot of these ad supported big tech companies. I think the cloud SaaS companies that were getting hammered, quite frankly, in Q4 and Q1 are seeing a resurgence right now, because the market knows now that the buyers of these cloud hosted products and SaaS tools, these are mission critical tools that they need to grow their business. They're not going to, no one wants the pain right now of ripping out mission critical SaaS and cloud services. That's just not something you do at this stage. You're trying to keep operations running. You've probably done a RIF of some sort, a reduction in force. And so you need more automation, more digital transformation. And then the third city that I was referring to is this e-commerce and marketplace logistics area that Amazon, Uber, DoorDash, Etsy, all of them sit in. And I think what we're seeing right now in earnings is a mixed bag there too. So, I think that there's three different stories within tech right now, and it's
how do you that last story? How do you measure them up? Meaning Uber is in one place, Amazon's in another, and Etsy's in another. How do you even try to define that?
Well, it's so, I was an early advisor since the founding of the company, and there was a time when in the first 3 years when Uber was doing really well, growing very fast, a lot of the investors and the founders and the team would talk about how Uber could be the next Amazon, but focused on transportation and logistics. I think half the audience kind of laughed at that, and half the audience was, nodded their head and said it's possible. The last few years has just been tough for Uber for many reasons. But I think what happened in this last quarter was that Uber has shown with, it's cash flow positive now. It's got 122 million active customers worldwide. It's got 5 million drivers. There's only one marketplace that's larger in terms of scale, and that's Amazon with 300 million active customers. So, I think Uber has shown that, core services like ride sharing, delivery, the economy is getting back to work. It's going back to school. So I think there's a real opportunity with the Ubers, DoorDashes of the world to really step up and show strength. Where, with Amazon, I think the retail spending that was happening with consumers, I think that's just fatigued right now in this economy. Inflation is kicking everyone's butt.